The topic of behavioral science has been an absolute passion for me, and it's helped shape my career, and I love sharing that with other people. So I'm keen to share these big lessons with you today. But if you're not familiar with the topic of behavioral science, or sometimes it's called behavioral economics or nudge theory or the psychology of persuasion, I'm going to try and distill it all down for you in just 3 simple lessons. I'm going to be even bolder than that, not just 3 behavioral science lessons, but actually just 3 words: context, motivation, and familiarity. If you fully understand these 3 words, I think it will really boost your effectiveness. Understanding the power of context and the way it shapes behavior, understanding the role of motivation in our customers, understanding how if something is familiar or not has a huge impact on customer behavior. Now, why are we here? Why do I think you need to really learn about behavioral science? Actually, this is the reason. It's because humans and human behavior is usually the most important reason for the success or failure of an initiative in business. And I don't say that lightly. Humans and how they behave, so our customers or our colleagues, usually they determine whether something works or not. Think back to the last project you were involved in your company. Maybe it was launching a new product or developing a new app. If it worked or not, whether the person leading that initiative was a success or not, usually comes down to customers. Did they understand the value of what we built? Did they go to the website? Did they buy a policy? Did they renew their policy? Did they tell the truth? Did they click or did they not? And if you didn't understand customer behavior, then usually the initiative doesn't succeed. And that's a huge problem. And most businesses, I'm afraid to say, having been in business now for over 15 years, most businesses are not very good at this. They think they know what customers want. They think they're building policies and products that will persuade customers, but often they get it wrong. And they have a whole outtray of initiatives that have not succeeded, and they're wondering, why is this? Many businesses leave this area to chance. They rely on anecdotes, or they rely on gut feeling. So firstly, the first of our big 3 lessons is that businesses tend to oversimplify people. Businesses tend to oversimplify people. We tend to think that customers will just buy a product if we make it cheap, or if we make it available online, or if they need it, for example. And I've been involved in lots of projects down the years where, very senior people in business say, well, let's just offer people lower prices, or let's give them more features, or let's just tell people about the features that we've built, and that will do it. A classic example of this that I'm working on right now would be retirement planning. Retirement planning is something that customers should do. They should be setting aside money every month to save for retirement, but people don't do it. Well, why is that? Maybe someone in a business would say, well, it's because people haven't got enough information about retirement planning, so let's just give them some facts and figures. And we tend to think that if we just give them information, or we give them a good financial price, or we give them some good features, then they will do it. But unfortunately, human beings are not that simple. And this is probably the most profound lesson you could learn, really, from behavioral science, is that human beings are not kind of robots where you just dial up a lever and people change their behavior. No, actually, the big rethink is that human behavior is highly complex. It's highly complex and it's highly context specific. To prove this to you, let's imagine I ask you this question. Would you travel across town to save £5 or $5 or €5 or 5 Swiss francs? Now, I don't know what your answer to that question is. Would you travel across town to save £5? Well, actually the answer is it depends. And they did this in an experiment where they asked some people, imagine you were buying a jacket, or dress or whatever it might be, and it cost you £15. And would you then travel to another store if you found out that it was available for £5 less? And in that example, 68% of people said, yes, I would. I think it's good value. I'll save $5. But then a different group of people were asked, hang on, imagine you're buying a jacket and it's worth $125 or £125. Would you now travel to the next store across town to save $5? And now only 29% of people said yes. That's interesting, isn't it? Because surely if £5 is worth £5, it shouldn't matter whether it's a £15 jacket or £125 jacket. People should just travel across town if they're interested in saving £5. It turns out that humans are much more affected by context than we might think. And we are like this as well. The context hugely impacts our decisions. So if you have to summarize the whole world of behavioral science into 2 words, I would say it's these 2 words. Context matters. Context matters. So when you're asking yourself the question, will customers respond well to this offer? Actually, the answer is, well, context matters. Have we got the timing right, for example? Is the environment suitable? What are their peers doing? Do they find it understandable and appealing? Do they trust the brand? Do they like the messenger? All this list that you can see here on the right of the screen are actually things that have a huge role to play when customers are making a decision, whether they're going to buy, renew, download the app, or whatever it is we're thinking about. So behavioral scientists basically say humans are not as simple as you think. Actually, they are hugely impacted by all these other emotional and contextual factors that influence their behavior. And has your product, has your idea, has your campaign taken account of this? When you're building a new product, have you really thought about the role of the context in which it will be presented to customers, not just the content of the solution? A pretty big project that I worked on was related to selling home insurance through a very famous furniture store. And I remember the teams were discussing this at the time, and they said, well, look, people need home insurance, and it's a good product, it's a good price, and people like this furniture store. So the brand is good, the product is good, the customer need is good. So if we offer this home insurance through this brand, people will buy it, surely. Now, I would say that's oversimplifying human behavior, because it turns out people do need home insurance, and they do like this brand, but that doesn't mean they want to buy home insurance from this brand, from this furniture store. And it turns out that for them, that wasn't a good fit at all. They expected to buy home insurance from financial services providers. And so understanding the interconnected nature of brand, product, and context is really important. So human behaviors are not as simple as you think. They're actually hugely context specific, and they're hugely complex. But there is some hope, so don't worry. Here's what you can do. Make sure that whatever idea you're having or your colleagues have got is not just logical, but also psychological. It's a bit of a play on words, but really, if you think about the ideas that your colleagues will have in business, usually they are logical. They make sense. They are good prices, good products. They meet the customer need. And we assume that customers will be interested because we think it's logical. But actually, have we stopped and thought about, is this psychological? Is it informed by psychology? And so let me give you 3 quick examples of where we did this with our clients in the last year. One of our clients is a health insurance company in Germany, and they introduced a voice bot on the phone. So when you call up their call center, this voice bot speaks to you automatically and tries to do a customer identification. And this process is successful in terms of a logical process. It works quite well. 90% of people are identified using the process. But we noticed that the customer satisfaction scores got worse. Somehow it's working, but the customers are not happy about this. And when you stop and think about it, maybe that's because it's a logical process, but it's not very psychological, because the customer has called up to speak to a human. That's why they picked up the phone. And instead of getting through to a human, we're putting them on the phone with a voice bot, which might feel like a conflict. I want to speak to someone and you're stopping me. And so what we did is we just redesigned the script slightly to say, hi, I'm a voice bot. I'm here to help you get you through to the right human agent. You're currently in the queue, but while you're waiting, let me identify you so that when you speak to someone, things will go quicker. And do you see what I've done there? I'm not fighting the customer anymore. I'm saying you will get through to a human agent, and I'm making use of the idle time. I'm saying you're currently in the queue, but while you're waiting, let's get you identified. So you can see that the redesign of this process, by changing the words slightly, goes from a logical process to a psychologically informed process. And what we noticed is that the NPS scores got better, got back to the original scores that they had before. Secondly, we found that with a lot of health insurance companies and life insurance companies, we noticed that customers don't always tell the truth about their health. And again, what you notice in most insurance forms, if you have a little look at travel insurance, life insurance, health insurance, usually people answer all these health questions, and then right at the end, they are asked to declare that everything they said was true. That's very logical because customers provide answers and then they declare, yes, this was all truthful. But is it psychological? Well, actually, when you go to a court to give evidence, you have to swear before you give evidence, not at the end when it's too late. So why don't we try out something different where we ask customers at the beginning of the process, do you promise to be truthful about your health? And we noticed that by doing this, we had a big impact. We had 2 or 3% more people told us that they drink alcohol, and they have taken recreational drugs in the last few years, and we noticed more people saying that they were smokers as well. So going from a logical approach to a psychological approach can make a big difference on changing behavior. And thirdly, on the topic of increasing sales, we worked with an insurance company in America where they were offering customers a new product and they were able to save customers money. I think it was like $400 you can save on average by switching to this home insurance plan. And because it's such good value, right, $423 saving, they actually put the message on the outside of the envelope. This was in an old-fashioned letter that they were sending people in the post. And that's logical, right? If you can save money, let me tell you about it. But what do you think when you receive an envelope in the post that has a banner on the outside of the envelope saying $423 saving? You, like me, you probably think, oh, this is just marketing. They're trying to sell me a product. And what we found is that by removing the message on the outside of the envelope and refocusing the letter on how we could help the customer through this product, we actually had 3 times more people calling in and 2.5 times more people buying the policy. Moving from something that was very logical to something that was psychological, informed by psychology. So that was lesson number 1. Humans are not as simple as businesses make out to be. But actually, once you understand how complex and how context-specific human behavior is, you can address it by making ideas psychological, not just logical. That was insight and lesson number 1. Lesson number 2 is that businesses tend to overestimate their customers' motivation and their customers' level of interest. I've noticed this every day pretty much of my life the last 15 years. Wherever you go in business, companies are constantly assuming that their customers will be interested in the products that you've built. Because we know usually we're passionate about what we've built. We've launched these great products that we think meet a customer need, and we expect the customer to be interested as well. But in reality, we have to unfortunately realize that actually customers are nowhere near as interested in what we've built as we think they are. If I had to summarize what most businesses think most of the time, they tend to assume that if we build it, they will come. That's a famous line from that movie, Field of Dreams. But it's kind of summarizing what every business tends to think. If we build it, if we build that app, if we build that website, if we build this rewards program, if we build a new way of buying insurance or whatever it might be, if we build it, they will come. And I'm sure you've been in meetings where we've built it and customers have not come. They have not come to the website, they've not renewed their policy, they've not clicked through, they've just been much less interested than we thought they were. And here what we need to do is we need to rethink the whole thing and realize that motivation has a core role to play. We tend to think that it's all about usability, but actually it's not just about usability, it's about desirability and motivation. And so I would like to introduce you to this great framework. It's incredibly simple, the most robust behavioral science framework for behavior change out there. It's called the COM-B model. You can look it up online. It's just 3 letters, C, O, and M, COM, for B. B is the behavior that you're looking for. This model has been developed especially for healthcare settings, but it works really well in business as well. And it basically says that if you want to get the target behavior, which might be buying a policy or filling in a form correctly or responding to a letter, people need to be capable. That's the C of capability. They need to be given the opportunity to do it. That's the O. And they need to have the motivation to do it. Now, without C or O or M, you don't get the target behavior. People need to be capable, so they need to be able to do it. They need to have an opportunity to do it. You need to be able to create the environment in which they can do it, like a website, and they need to be motivated to do it. Now, I would say that user experience, design teams, and business people often focus on capability and opportunity. They say, can people buy life insurance online? Yes, they can. Have we created an opportunity for them to buy life insurance online? Yes. In which case, we assume that they will. We focus on capability and opportunity, and we forget about motivation. Unless customers are motivated to do so, it doesn't matter how easy it is. It doesn't matter how usable the website is. People will not go ahead with the desired behavior. You need capability, opportunity, but most of all, you need motivation. And the thing is, if you have motivation, the other 2 factors are much less important. For example, think about last time you filled in a form to rent a house, a tenancy agreement, or maybe even a bigger decision, a mortgage that you were applying for, or a passport renewal, or a visa that you had to apply for. Was it a smooth, easy process? I doubt it. It was lots of forms, lots of backwards and forwards, lots of question marks, lots of clarifications. Maybe you stayed up till 1 o'clock in the morning filling in this horrible form, but you did it because of the motivation, because you were motivated to get that visa, to get that passport, to get that house. Do you notice that when there's motivation, people will actually persevere through huge difficulties because they want to get to the goal? And that's what we need to find with our customers. We need to create motivation, not just create capability and opportunity. But how do we do this? Well, in my experience, dialing up motivation, it can sometimes be as little as just a word, a question, or even a sentence that you can use. So let me give you a few examples where we were able to dial up motivation quite easily. In one example, we worked with an insurance company that wanted to encourage customers to use the online portal that they had built. Most insurance companies have done this. They build a self-service portal and they assume that customers will use it. But unfortunately, customers are not that interested or they're not aware about it. And usually, insurance companies contact the customer to say, hey, why don't you register to use our tool, our portal? But the customer thinks, oh, this is a high perceived effort. Why would I do that? What's the benefit? What's in it for me? And we noticed that even the word register for our portal, register to our website, it might feel like a real hassle. I've got to register for this, a bit like registering to vote. And so all we did is we just changed it around. We changed the word from register to activate your account. We said, look, your account has already been created, which was already true. You just need to go through these few clicks to activate your account. And the word activate has a lower perceived effort than the word register. And what we noticed is that just this alone created a big uplift, a 29% uplift in activations. Secondly, we worked with another insurance company that provided an interactive tool that underwriters could use to provide health information about the customer when they were processing an application. So when the customer's thinking about insurance, you can use our interactive tool, this is what the insurance company said, to provide health information about the customer. But we observed that maybe calling it an interactive tool, maybe that's backfiring because maybe the underwriter doesn't really want an interactive tool with the company. Maybe the doctor doesn't want to interact that much. And so instead of calling it an interactive tool, which is maybe confusing, maybe backfiring, we just reframed the decision. We said, would you like to use this new fast track process, which was the interactive process, or would you like to use the traditional manual process? Now, if I give you the choice between fast track or manual, suddenly it's much clearer that one of them is better than the other. Now, these were the two processes before. It was interactive or it was, I think, non-interactive, but it wasn't being presented very persuasively. When you call it fast track or manual, you create motivation and the customer wants to go with the fast track approach, which is what we noticed here. 14% more people use the fast track process. And thirdly, we've noticed that in the world of health insurance, where we do a lot of work, customers often call up and they ask questions about the prices and why is the price going up? Am I getting good value for my policy? And usually the insurance company talks to the customer about the policy, explaining all the benefits. It tried to give a reason for the price increase. That's the kind of logical approach. But what we notice is if you can change things around, if you can just ask a question of the customer and ask them this, what matters most to you when it comes to your health insurance? This was far more effective because when you ask customers this question, what matters most to you? They start talking about their family or they start talking about health concerns they have. And all of these things create motivation because suddenly the customer is thinking about all the reasons why health insurance is important to them. So moving away from a purely logical approach, facts and figures, price and benefits, to a psychological approach where we're dialing up motivation is a much better way. And in this case, we noticed that the renewal rate significantly improved with this health insurer. So that was lesson 2. I've covered lesson 1, which is that we tend to simplify customer behavior. We think it's quite straightforward, but actually it's hugely complex and context specific. And then secondly, we've just talked about the second big barrier is that we overestimate the customer's interests and we forget that actually they're not as motivated as we think. And now we're moving on to the third and final lesson today, which is that we tend to assume that everything can be moved online, digitalized. And actually, the funny thing is that most things can be done online now, but that doesn't mean that customers want to do it online. Because we need to remember that human behavior is complex, it's context specific, and there are these other forces at play. Specifically, I'd like to point out familiarity and uncertainty. These are two huge forces that are at play as well, and they will hugely impact whether people want to do an action online, for example, opening a bank account or buying health insurance. And we have a little tool that we use with our clients. We find it quite helpful. It's called the stakes spectrum. And we like to plot any human interaction that a company is trying to do with the customers. We like to plot it on this spectrum. So when we say stakes spectrum, we mean high stakes or low stakes. So firstly, think about whatever the customer is thinking of doing. Maybe they're thinking of checking their bank balance, or maybe they're thinking of buying product online. Some things feel low stakes because they're straightforward, they're familiar. We've done them many times before. For example, checking your bank balance or paying in a check. But some things feel a bit more high stakes. For example, buying shoes online. That feels a bit more risky. What if it goes wrong? What if they don't fit me? What if I don't like them? And some things feel really high stakes, like buying a house, maybe buying life insurance. Did I get it right? What happens if I get it wrong? Now, when you plot things along the stake spectrum, you start to realize that some things are easy for customers to do online because they can imagine it's not going to go wrong, and even if it does, there's not much bad outcome. It's low stakes, and that's what we would plot on the right hand of the spectrum. And we would say that actually at this end of the spectrum, you can do a lot of things online, but be aware that if you get it wrong, customers will be pretty unhappy. Unfortunately, the opportunity is that you might dismay customers if their high expectations are not met. But on the flip side, on the other side of the spectrum, actually where a task is very high stakes and maybe customers don't want to do it online, you actually have the opportunity to delight customers if you help them. For example, if people have had a big problem, they've had an accident, or someone has died in the family, or maybe their bank account has been hacked. In those environments, it makes sense to speak to customers, maybe on the phone or in person, and show them and reassure them, help them through this difficult time. And if you do that, you can really delight customers. But also, it's worth thinking about these techniques that we help our clients with that move tasks towards the easier end. For example, let's take the example of shoes. Buying shoes online, for me, it feels quite high stakes. What if it goes wrong? So think about what are the ways that you could encourage me and reassure me to buy these shoes online. Well, I guess 4 techniques come to mind for us. Firstly, if it's been done previously and it went well. If I bought shoes online a few weeks ago, a few months ago, and it went well, I'm more likely to do it again. That's kind of habit and repetition. Secondly, other people's feedback gives me confidence. If I know other people who did it and it went well, then that gives me more confidence to do it myself. Thirdly, reassurance hacks like free returns. I think this is a really good trick, right? It gives people psychological safety that even if it goes wrong, it's okay, you can send it back. And think about this when you build a product and you ask people to do it online. Do they feel reassured that if something goes wrong, you'll do something about it and there's a chance to change their mind maybe? And finally, an option to revert to a non-digital path. For example, if you're buying health insurance online and you're not sure if you've got the right plan, are you able to speak to someone, maybe on the phone, maybe through live chat? Being able to have that human touch when needed. So we think that rather than just simply assuming that everything can be put online and the customers should just get on board with it, we need to understand that humans view the world through a kind of stakes spectrum. Some things are low stakes, some things are high stakes. In fact, right now we're working with an insurance company where customers are going online and they're checking if they're eligible for their claim to be paid before they go and see the doctor and before they have the surgery, for example. But we're noticing that after people go online and they get an answer, yes, you're covered, 52% of customers then call up the insurance company to have the same conversation, which doesn't really make sense. Surely, if you've just been told online, yes, you're covered, then why are you calling up? Well, the stakes spectrum helps us understand this. People need reassurance. It feels high stakes for them. I'm not going to go and have expensive, difficult surgery unless I'm sure, absolutely sure I'm covered by my insurance company. So we need to help improve this customer journey. And if we're going to keep it online, we need to use some of these techniques like reassurance hacks and other people's feedback. And we need to encourage people to do it for the first time, because if it goes well the first time, they will do it again successfully. So there we go. We've covered 3 big lessons. I've tried to summarize the whole of behavioral science into 3 big lessons. The first one is that humans are highly complex. They're not as simple as businesses tend to make out. So next time you're in a meeting and someone says, oh, look, we just need to give people cheaper prices or more features, or we need to tell people about these features, you can hold up your hand and say, actually, human behavior is highly complex, and therefore we need to experiment. We need to test out what works best in each environment. Secondly, businesses tend to assume that the customer is really interested in whatever they've bought. But actually, you can speak up next time in a meeting and say, actually, unless we've understood motivation, customers are very unlikely to take action. We need to dial up motivation. Sometimes it's as simple as just a word, a phrase, or a question we can ask customers. And thirdly, businesses tend to assume everything can be moved online and that will be fine. But actually, with the stakes spectrum, you can realize that unfamiliar things, uncertain things can really affect digital take-up. So that's it from us. That was a quick whistle-stop tour of all of behavioral science in 3 lessons. You can connect with me on LinkedIn. I've given you a few options here on the screen of other things you can read if you're interested in this topic. I got the bug for behavioral science about 15 years ago, read pretty much every book that's going on the topic. So I encourage you to get into the topic, listen to some podcasts, watch some videos, and connect with me online. And I look forward to hearing from you soon.